the latest from D.C. on how they are approaching this latest news on the NYSE. Well, we have the guest here on set, Evan Stewart. He's a partner at Zuckerman Spaeder, to talk to us a little bit about these sort of antitrust issues and the issue with a monopoly. We just heard Representative Conyers speaking, saying that this potential deal with Nasdaq and the NYSE would mean less competition, would mean job losses and increased cost to consumers. Do you agree?
Well, he's partially right and partially wrong. He's right that there's going to be some job loss. However, he's not right that there's going to be an injury to consumers. The issue about the monopoly is the listing of companies, not that consumers are going to have fewer choices. In fact, the numbers that were just cited to you, there are lots of other companies providing off-the-floor exchange trading that give lots of competition to the stock exchange and Nasdaq right now. So it's not a consumer injury question. It's that the listing companies are going to have only one place to go in the United States. Now, in the public document that was sent out this morning, they try to address that. And they try to make an argument which is sometimes called by the antitrust lawyers a failing company argument. And the argument would be that the listings in this country have been going down quite substantially and have been going overseas. And so they're really trying to redefine the market and saying, in order for us as a country to have greater strength as far as listing, this is a way to deal with IPOs going offshore, listings going offshore. Whether the Justice Department will buy that or not is a different question, because undoubtedly there will be one place in the country where you have to list your shares if you're a public company.
Well, then hold on a minute. We spoke with Duncan Niederauer back when the Deutsche Börse bid was announced in February, and let's take a listen to what he had to say.
Look, you've seen the same rumors I've seen. We don't, nothing to respond to them because nothing's official. We've heard nothing other than the same rumor you've heard. Our view is we signed a great deal with a great partner, and it was absolutely our preferred partner.
All right, so there we see Duncan Niederauer at the time saying that the Deutsche Börse was a perfect partner, a preferred partner. Do you think he was saying that perhaps because he knew a potential bid from the Nasdaq would result in a lot of regulatory hurdles?
Possibly. I think there were serious questions about whether Nasdaq could get the financing to do this. And one of your prior colleagues was talking about the debt that's being taken on here. That is a big issue for Nasdaq, the amount of debt to fund this deal. That the market, I think, is going to react somewhat negatively to that, but that's not really my field of expertise. However, I'm sure that they thought this was a very substantial premium. Now we're seeing a much more substantial premium being offered by this new Nasdaq, $42 a share. Whether the German company is going to come back with a even sweetened deal, we just don't know. But clearly, this is not the end of this story. We're going to see more in this story before it's over.
All right, Evan, thank you so much for joining us. Appreciate the insight. That was Evan Stewart, partner at Zuckerman Spaeder Law Firm.